I make the decisions on what we buy. After buying a lot of assets in this area, I mean, I get calls from every broker with everything that goes on the market. And I get a lot of off-market stuff coming to me also. I mean, we just put 100 million in the ground in the last 8 years, and that's a lot of money. So, I mean, you know, and we're seen as a kinder, gentler kind of buyer. We're like the sellers. We do what they do. So it's a little bit of an advantage. I mean, money talks in this, obviously, but we have people that don't want to deal with institutional people that come to us. So part of the trick in this deal is how to raise money through crowdfunding, but not be seen as an institution. Could be, you know what I mean? That would be bad in a way. So, you know, it's going to have to be, you know, it's going to be our same process, just with a different source of money. I mean, people didn't know where the money came from the last time I did this with the fund, you know, with the private equity. They knew we were real. They knew and I buy stuff myself too, from time to time if it's right. So, you know, but I mean, it's you know, I would say we have a superior ability to understand the opportunities as they come at us better than most people. You know, I mean, a lot of the people that are trying to raise money now are outsiders that just are think it's a good thing to do, and they're flying over and saying, "Hey, let's go down there. That looks good." You know, I mean, it is, and the theory of it's good, but it's different when you're a known commodity in a market. And I've never not closed a deal before. If I say after my due diligence, if I say I'm going to buy it, I've always closed. And that's a big thing. You know, people know me as someone who, when I say something, it matters, and we will close those deals. So, you know, it's not everything, but you know, we continue to find good things, and you know, the underwriting is very simple because the soil is quantitatable, the water is quantitatable, the microclimate is quantitatable. So, you know, the water district is quantitative. You know what I mean? It's, you know, you have to know there are some no-fly zones, you know, microclimate related. There's areas that have, you know, sand streaks in them that you don't want to buy. There's things like that we know how to discern. But I mean, you know, this is mathematical almost, right? You know, putting the right things together and then knowing what nurseries to buy the stock from, you know, what irrigation system you're supposed to use in those conditions. I mean, all the stuff that we do every day, you know, we take it for granted, but it's a very strong program we have to deliver value to the investors. There's other people like me that are bigger that we compete with. You know, there's private equity firms out there trying to buy stuff that compete with us. There's, you know, contiguous owners that compete with us, right? I mean, I would say probably 40% of all sales in ag are the neighbor buying the neighbor. You know, and they'll pay more to be contiguous, right? They'll just say, oh, it's, you know, I'll pay. I mean, I would say that is a big way people do things. I mean, we just bought a property last year that's contiguous to another in the fund, right? And it's, you know, we had a ranch and the people next to us. The old man died. The kids called me the next day, literally, and said, "I want to sell this. You're my most likely buyer. Do you want to buy it? I'd rather not use a broker." And we bought it from them. So, I mean, that, you know, that's kind of how it works.